Super duper AFN. That's AG Growth International Inc. on the Toronto Stock Exchange. Another pick from the US stock screeners, stageanalysis.net. And it's just a curious case, guys. And I decided to deep dive it, do some Stan Weinstein stage analysis, and do my own chart trading framework on the monthly candle chart. Do the forest to trees approach, index, sector, industry, how that all fits in. And let's see if we got a play or not, guys. All right, for no further ado, monthly candle chart. What is just my trend? Oh, that looks pretty sweet. Patterns within patterns. Here's a bigger, more aggressive pattern. There you go. What is that measured move, guys? Right here. Oh. So if we have a close, got to be really careful here. We need the close of August above the 58 line. 58, high, close, 58.18, 58.15. Yeah, about 58.15 there. You want to close above that. If you have a close above that, the target is $66 right there. But remember all these wicks? They looked like this one, eh? 2 months ago, 3 months ago, 6 months ago. They were green above, and they decide to close within the month. So it's not done till it's done. You're above right now. It looks good. And keep an eye on it. So we're always going to have to wait for that close for the end of month to make sure we don't get trapped. Okay, let's go on the weekly stage analysis. That stock had a nice run right here. Stage 2, stage 4, stage 2. Got out. Trendline violation. The precision of the trendline violation. 4 points. Break on the 4 if you're out. 1, 2, 3, 4, 5. And you're off right there, guys. But what am I looking at now? So now it's stage 3. And it's tempting a stage 2 continuation. What I like here is it's outperforming the SPX, crossing over from bottom over to the above the 0 line. What I also like is, where's my arrow? The volume, twice the average of the previous 4 weeks. Above a horizontal breakout line. Remember, this line is the monthly defined resistance, the hidden resistance. It's that line we define with the opens and closes of the monthly. And the weekly defined resistance, ultimate resistance, would be right here. So if you have a close above those two, that'd be awesome. That's why we're using the Ichimoku cloud on the weekly. If there's no overhead red, that means it's been evaporated. And we're set to go. It's looking nice. If I look at this, if I didn't look at the monthly candles, and I just look at the weekly, I didn't care about multi-time frame analysis. I'd buy here, guys, right here. And that's all she wrote, stage 2. But we don't do that, right? We want to make sure we're in harmony with the higher time frame. We're getting there. We just need that close at the end of August. So that's all good. It looks pretty sweet. But now we need to go check out its index. It's how's it behaving? Toronto Stock Exchange. And the Toronto Stock Exchange, guys, is not doing too good overall. I had labeled a breakout right here, but it's really having a hard time exploding out of it, moving sideways, coming back down. I don't like it. That's not Sometimes I enter stocks and they have this behavior and then you stick around with it, but why? You want this to be a stage 2 a la Apple, a la Facebook, all these that broke out and continued for years on. Not that it's not going to do that, but right now I had it. I don't like it that's coming back in within those barriers. And if I check on the monthly, I did have a breakout right here, and it's coming to retest that breakout line here. What I don't like about these breakout candles is the wick. I like when it's convincing close, Marubozu candle, or a shallower, smaller wick, less noise above the breakout line to give me that extra confidence that the pressure was really, there was no selling pressure up here that sunk it back in. It was the buyers that were controlling all the way. But you're still above the 12-month moving average. It's still going upwards. It's just in a pullback phase right now. So we could just leave it at that until we really start, if we break under the 12-month moving average. And so it's pretty neutral. It's just not healthy compared to the SPX. So what about the sector? The sector is non-cyclical for the AFN. Consumer staples, guys. How's that look like on Stan Weinstein? Not too good, guys. Underperforming the SPX for a while. Stage 4. Bounced back up. Went above 30 average. So end of that, we would have been out Stan Weinstein. So after that, when you re-pierce the 30 average going upwards, that means you're out. Because Stan says the trend's over or slowing down. So you have to wait. It could be going in a sideways move for a while. So it's kind of a stage 4, kind of a stage 1, back into a stage 1 right here. So I had done a previous analysis where I drew that was going to go bounce back down here. But now I can't short it until it goes back until the 30-week average. So consumer staples, not super duper. So we have a sector that could be potentially bringing us down of that super duper AFN. So you see, if you just take the AFN chart, Stan, you'd get in. You look at the monthly, you had your first warning sign that you need to wait. Look great in harmony, but you had to wait. You go at the index, TSX. Okay, it's in the pullback phase. You could move on. But for that sector, staples, not great. And you see on the monthly, look, you're below the 12-month moving average. It tried to go through during this month. It's still below right now. So we have to see if this was noise, if it's going to follow through and get back into a stage 4, stage 1. Or it's just going to continue downwards, guys. I just don't like this candle right here. Doesn't look like a top. I don't know. What I don't like is lower lows right here. See in the nice uptrend, higher lows. So when you move your sell stops along the way, you don't get triggered. But right here, that's how I would have played this at a Stan stage analysis way. My sell stop would have been right here. So after that, that's a higher high. Oh, even here. Goes up here. I would have been triggered out right here. If that was my only criterias, my pullbacks, my sell stop moving up, I didn't care about moving average violations or trend line. If this was my last recourse, I would have been out right here after this nice run that started all the way back down here. We've broken out somewhere here. 30 average going, 12-month moving average going up. Sell stop moved here, here, up here, even here. See, never goes below a pullback. That was a confirmed pullback. That means that it went down and started going back up. That's when you move it up. Pull back here. It's just beautiful, guys. No problems writing that awesome stage 2. But right now we're just not in a stage 2 anymore. We're in a stage 3, and look at the 12-month moving average really going downwards. So the pressure's down, guys, for staples. Really down for that sector. So we're in that sector. We're in staples. And what about the industry? industry. It's fish and farming. Fish and farming right here. I just added it. Fish and farming had nice stage 2 on the monthly. Sideways move, and now it just broke out. So I don't know what's the quantity of stocks that are in there. Here, but I rather this one here. Multiple retests of a breakout line, validates it even more. Broke out. Look, the month is still ongoing, could close within, come back out down here, but this is very constructive for fish and farming industry. Okay, so now we got a view index, so still in stage 2, sector definite stage 3, stage 4, and fish and farming stage 2. A lot of mixed signals right there. There's not, forest to tree is not in harmony, guys, not in harmony. Let's say I go back to my AFN, and I want to compare it to its peers in the fish and farming right here. Show symbol info, non-cyclical, staples, and fish and farming. So let's say I go on the stand, and usually we compare it to the SPX, right, as our baseline. But I could also have fun, compare it fish and farming, and we're not, it's not us driving fish and farming up, guys. We're actually underperforming fish and farming. It's looking good. We're getting dragged up with fish and farming, but we're not performing as much as fish and farming is. That's not the way you want it. You want, as its peers, there's probably out there somewhere a better, would have to look at the industry, fish and farming, and there'd probably be even a better pick than AFN. Crazy, right? Sometimes you look at the stock pick, but after that you get clues. Makes you look at the industry, the sector, and you can say, hey, why would I pick this guy when visibly there's probably another one looking even better? Pick the best of the best. And let's say I want to compare it to, let's go get my sector S5 cons. So I could even compare it to the staples. And right there, I'm doing okay. Outperforming the sector. Above the zero line, going upwards. I like that. So it's probably a better pick in the industry of fish and farming than AFN, even though it looks great. They probably look even better. You could dig in for that. But what I didn't like is the behavior of the sector. It might just drag us down, guys. So if we don't, I don't know what's going to happen here. We'll have to wait for the end of the month. And what's fun about waiting for the end of the month, we're already going to wait for the end of the month for that uptrend on the AFN chart itself to make sure we have that August close above the breakout line. And then we'll see at the same time at the end of the month how consumer staples, if it decided to close on top or if it stayed below the 12-month moving average. I don't think we want to touch anything in that sector. No matter how bullish they are, you just don't want to get dragged down, the industry dragged down by that sector, guys. That's pretty cool, right? We did pretty much forest to trees. We did what I call top to bottom, harmony within the time frames. And just keep an eye on out, guys, for this close right here. This awesome chart. AFN looks great. You just want that close above 58.15. All right? Thanks, guys. See ya. Ciao.